to Tax Chats with Danielle, Sherwin. This is season 2, and this is going to be a sector insights edition. So we're going to really focus on RSM's sector specializations and our industry tailored approach. So I'm joined by Adam Crowley, our real estate and construction lead in Sydney here, and Adam leads the national sector group. So I thought it'd be really nice to start this season off with a little bit of a collaborative discussion around how we work together, some of the international tax and transfer pricing issues we grapple with in the sector, and I guess learning a little bit more about what's keeping our clients up at night, the risks and opportunities in the sector. So do you want to give us a little bit of an introduction around kind of what you're seeing in the sector?
Thanks, Danny. Look, super excited to be here on this second season. So thank you for having me on. As you mentioned, my name's Adam, I'm the head of real estate and construction at RSM. Ultimately, we're a sector-led group and division, and we try and just deliver on things that are specific to that client's sector and their needs. So bringing our insights and this understanding of the sector, the things that are meaningful to them, and then bringing on in technical experts such as yourself, be it international tax or duty or anything in that regime, to help clients deliver on what's meaningful to them, the things that actually keep them up at night. Fortunately, we have experts such as yourself able to help our clients through that international tax regime. The big one of late has been the transfer pricing and capitalisation changes. It's really a fundamental shift in clients addressing how they deal with interest deductibility. So we've seen a big shake-up in the sector on that, and it really has kept our clients on their toes. The other one being the debt deduction creation rules. So clients who've never perhaps had to previously grapple with this, even if they're not necessarily foreign-owned, have found themselves having to grapple with this regime.
Yeah.
And so it's interesting. I'm sure it'll get more complex before it gets simpler. Yeah. But that keeps us working, keeps our clients coming back to engage with this, to try and make sure they remain compliant. So it's been an interesting time.
I think it's really interesting the way ThinCap rules work as well. Obviously, that's generally kind of targeting the more sophisticated and higher materiality type transactions. So that's a 2 million interest de minimis threshold applicable, but the transfer pricing rules, they have no de minimis. So, moving those provisions around means you've also captured a lot more taxpayers.
And it's really hard to be able to take a client through that so that they understand, they think they're borrowing capital, they're going to apply it towards this property development and this acquisition. Like any other business expense, they think, my cost of my capital should be tax deductible like any other expense I have associated with the project. And to be able to explain to the client that those things are capped, they're limited, it can result in a fundamental change and shift in the feasibility of their project if all of a sudden a lot of their costs of doing what it is they do is no longer tax deductible to them. Together with dealing with withholding tax provisions and the like, it really does make it a bit of a minefield out there for clients. So tough space to be in. Tough space to be in.
That's interesting.
Yes, very interesting.
I think that's probably one of the key risks that I see for your sector, but it's also kind of one of the best opportunities too, because if you get the planning right at the outset, you'll understand, where there's wiggle room, where there's not, and you can adjust your approach and factor the tax payable kind of accordingly. At least at the outset, and you have a bit more certainty moving forward.
Yeah, I think this the way I've found clients trying to grapple with it is really a two-phase approach. One is because the changes have been so fundamental to their business. One part is just understanding how the provisions operate to remain compliant. Because you're going to have to grapple with these provisions whether you like it or not if you're affected by them. So the first thing is, let's be aware of what they are. Let's be aware of how they affect the business. Once we've got a good handle of that, you're then addressing the opportunities, and you're saying, well, for the next project, instead of funding it in this manner, we'll fund it in another manner, or fund it in a different structure to try and mitigate the risks and issues that come of that. So it's both a means of grappling with the compliance, and then I guess an extension from that being looking for the opportunities from a planning perspective. The important part is they need to engage with it, and they do need advice on it. So it's just one of these things that I don't think is going away, and we'll have to grapple with and help clients hold their hand to go through the process.
So Adam, in terms of moving forward, what are some of the themes or common issues that you're going to see kind of coming out for the sector?
Look, I think there's a lot of the same. Access to capital. The markets are so volatile at the moment. You just watch sort of what goes on overseas and the foreign politics and things that all happen. There's a lot of uncertainty. I mean, ultimately, I think Australia will continue to be a foreign inbound investment jurisdiction for real estate. And because of that, we're going to continue to see activity cross-border. We're continuing to see capital flows into Australia. There's been a lot of talk about the housing crisis and the lack of housing supply. I think one of the key ways to deliver on a lot of that is to try and make Australia an attractive place for investment and get things built, get housing supply moving forward, and that will involve cross-border dealings, and it will involve cross-border capital. And because of that, we're going to have to grapple with what is an evolving international tax regime we have to manage here in Australia. So you're going to be busy.
Well, the A2A keeps coming out with guidance and commentary and all the rest of it, but just some light reading, usually a few 50 to 100 pages of
A couple of pages of documents,
But I think it's really useful. Sometimes we may not always agree with the A2A's position, but it's still absolutely essential to understand for clients where risks lie and be able to apply the rules.
Yeah, I think that's a key thing. Is it's about managing risk. So you want to be as certain as you can on what the particular tax outcomes are going to be, and then, like anything else in a real estate project or development, you're managing all kinds of risks. Tax is just another risk that clients need to grapple with. And so if you can keep them on the guide rails, keep them consistent in their approach, and keep them up to date with what the changes are and how they affect their businesses, it gives them the best chances of succeeding.
I hope you enjoy the summary, and I hope you enjoy the upcoming videos, and stay tuned for more.